What is going on, y'all? This is Pay Me in Dividends, and today is February 18th, 2025. Now, the market was closed yesterday, right? The market is back open today, so we're going to do a quick rundown on my portfolio. Nothing has changed since the previous video, so the account is around $96,000, and again, I'm using the dividend tracker. Now, it does fluctuate a bit, and it's not completely accurate, but it does give you a ballpark estimation of where you are as far as monthly income. Right now it says I'm around $3,100 a month, but I've actually been collecting a little over $4,000 a month consistently over the past 4 months. February should be the 5th month in a row that I'll be over $4,000 a month. But again, it still gives you a sort of a depiction of where you are as far as dividend income. So I like to use this as a visual so that you guys can see what I have in my portfolio, and basically you just manually input these stocks into the tracker. So I still have 1,000 shares of MSTY, 800 shares of NVDY, both from YieldMax. I also have 500 shares of AIPI from Rex, 500 shares of XDTE from Roundhill ETFs, and 100 shares of AMZP from Curve ETFs. Now, let's just take a quick look at the market and see what it is doing since the market was closed yesterday. So it looks like the S&P is green today. It's about flat, but it is green. I also want to take a look at Bitcoin, right? So Bitcoin is red today, but it's pretty much flat, right? It's down 0.25%. If we look over the past month, it is down 7%, and year to date, it is up 2%. So Bitcoin is holding strong. It's around that $95,000 range. We know that the high was around 110,000, give or take. So it is holding pretty steady in that $95,000 range. Now we're going to take a look at Misty, right? The reason I want to look at Misty is look at how it recovered, right? So again, guys, if you guys are new to this type of investing, every single time these high yield dividends pay a dividend, and actually this goes for any stock. You can look at any stock on the market, whether it's a high yield dividend ETF or just an individual company like Coca-Cola or Pepsi or Walmart. Whenever they pay a dividend, that dividend is extracted from the share price, and then eventually it typically recovers. And as we can see, MSTY was around $27 a share. And then once they paid out their dividend the following day or after the X date, it dropped down to about $24 a share, and now it's back up to $25 a share. So it is recovering pretty nicely already. It is green as of today, and I want to take a look at MicroStrategy, right? Because there's a few things I want to talk about in this video, but the first thing I want to do is I want to look at MicroStrategy. Let's look at some of the news on them, right? So we can see that almost every day there are companies that are acquiring more shares of MicroStrategy, right? Which shows that there is trust in this particular stock, right? There's also a headline here suggesting that it could possibly be included into the S&P 500. That may just be an analyst who's kind of putting that out there. But we do know that MicroStrategy was added into the NASDAQ along with Palantir back in December. So it is a good sign that there is investor trust, and the more money that is being funneled into this company, the more trust builds, right? So MicroStrategy also, I found this article interesting, right? So here it basically talks about the state pension funds that are acquiring MicroStrategy, right? So here we can see each state is listed out, and it shows how many shares of MicroStrategy that they hold in their state pension funds, right? So I thought that this is interesting because this basically means that the government is trusting this stock in government employees or state employee, pension funds. And I'm going to tie all this in together, right? It may seem a little bit confusing right now, but I'm going to get to it, and then you guys are going to understand exactly why I'm talking about MicroStrategy, right? So the next thing we're going to talk about is there's a website called sailortracker.com, and essentially you're able to get a visual on how many shares that strategy, right? Because they're no longer MicroStrategy. They have rebranded themselves to Strategy. Michael Saylor has changed the company to Strategy alone, right? And so this website is a depiction of how many times they purchase Bitcoin. So you can see here on the green dots, this is every time that Michael Saylor has purchased Bitcoin. We can see his most recent purchase was February 10th. They bought about 7,633 Bitcoins, valued at around $742 million at the time of purchase, and it is down at the moment. But you can see that most of their purchases are up, and overall they are up. It looks like they have an average price here, right? Their average price per Bitcoin is around $65,000 per Bitcoin, and Bitcoin is trading around $95,000 as of today. So all time they are up 47% on Bitcoin, right? So the next thing I want to look at is NVDY. Now NVDY, we know it dropped down to $18 a share earlier this month. Now, why did that happen? Well, what happened is the whole DeepSeek news came out, right? And basically, it's a Chinese AI system that is similar to ChatGPT. However, they were able to, I guess, create this AI model at a fraction of the price of what OpenAI created ChatGPT for. However, there's a lot of holes in the story, right? There's a lot of missing information. But one thing we have found out recently is that DeepSeek has a lot of data breaches. And it is also rumored that the AI was actually trained using ChatGPT, right? And so now NVIDIA is back on the up and up, right? And again, I spoke about this in a video a couple weeks ago when this news first came out. These are the news tends to manipulate the market during the temporary, right? And so when these things happen, those are opportunities to buy, right? I talk about that all the time in these videos, is looking for opportunities. These high yield ETFs are no different than any other investment, right? Whether it be real estate, whether it be a business, whether it be relationship, whatever the case is, you have to know how to position yourself and when to get in at the right moment. Because, if you're getting in when it's all the way at its high and the news is good, at some point you may lose, right? So these are times where you really want to get in because, look, check this out, right? So it dropped down to $18 in the beginning of February. It's now back at $21 a share. If we look at the 52-week low, it's at $17 a share. But the 52-week high is at $31 a share. So we already know that it has the potential to go higher than this because it has already experienced $31 a share. And so this may be a time to load up, right? If you already have NVIDIA, it may be a time to add to your position. If you don't have NVIDIA, it may be a time to create a position if this is something that you're interested in, right? Now, the next thing I want to talk about, right? So somebody left a comment in my previous video, and I found it very interesting, and I don't know if this is true or not, but I did want to show you guys, and if you're not watching the video, I'll just go ahead and read it to you guys. But basically, this person commented, right? He has a friend. I know a guy who has this mindset. I'm quoting this comment, right? So he apparently his friend invested $200,000 into RYLD, which gave him 8,000 shares. He was duped at the time with countless YouTubers pumping high yield covered call funds. This $200,000 at the time was making him $2,000 a month in income, right? So fire a year straight, then 1 year beer hit. So I'm assuming that he met his friend, basically quit his job and fired for a year, or financial independence, retired early for a year straight. And then the 1 year bear market hit. So I'm assuming this was a few years ago, 2022-ish. So today, after a 2-year bull run, that same $200,000 investment is now worth $133,000, and the dividend income has decreased to $1,300 a month. So his last comment was basically, hey, don't rely on these high yielders and end up like my friend. He didn't learn. He sold it and moved it to Misty and YMAX. I pray for him. As next bear market, he might be working at Walmart. So this is a comment that somebody left, and I did find it interesting. Now again, we don't know if this is true or not, but I think we can learn a lesson from this, right? So I want to walk us through it, right? So basically what he's saying is he had a friend. I don't know if he's the friend or he has a friend, or if this is even a true story, but let's assume that this is a true story, right? So he has a friend that put $200,000 into RYLD. Your first mistake is, why are you investing in RYLD? Your second mistake is, why are you putting all of your money into one ETF? That is a no-go, right? I preach here at this channel. This is not financial advice, but I do like to put my opinion out there. And your first mistake was putting all of your money into one ETF, right? Now, the second mistake was quitting your job while only making $2,000 per month. Now, I'm assuming that this guy lives somewhere in the West, right? Let's assume he lives in America. Why would you quit your job after putting all of your money into one high yield dividend ETF that is only making $2,000 per month? And when I say only, that is great dividend income, but that is not the type of income where you just want to quit your job and never work again, right? Especially when all of that money is tied up into one ETF. So those are the first two mistakes, right? Now here's the thing. Again, like I spoke about in the previous video, right, is whatever your expenses are, if you plan on living off of a dividend portfolio, especially a high yield dividend portfolio, you cannot be naive. Whatever you think your monthly expenses are going to be, you have to double it minimum, because you have to account for bear markets, right, which is what his friend experienced. So you want to be able to have a surplus of dividend income so that you can continue to reinvest a portion of your dividends so that you continue to increase your income even in retirement. You also need to keep in mind taxes, right? You need to pay your taxes. If this is in a taxable brokerage account, dividend income is taxable. And you also want to have a surplus for emergencies and things like that, right? So I don't think putting all of your money into an ETF like RYLD or just one ETF alone in general is really the smartest thing to do, right? So I just wanted to use this comment as an example of why it is so important to do your research, right? And so this is why I show you guys all this, right? I show you guys the indexes, right? I show you guys Bitcoin. I show you guys Misty and what the underlying has going on at that particular time, right? So Misty is the ETF that I'm invested in, but it is based off of Microstrategy. And so you have to be an active investor with this type of strategy. This is not a passive strategy. Granted, the ETF managers are performing the options on your behalf. They're extracting premium from the option market, and then they're paying you out that premium in the form of a dividend. However, that does not exonerate you from not doing your research. You have to do your due diligence. You have to do your research, and you have to be active. You don't necessarily have to be a day trader or a swing trader, but you do have to understand where your money is invested and keep an eye on the underlying asset, right? This is why I'm not the biggest crypto guy, but I do like to track Bitcoin because MicroStrategy owns most of, or a large portion of the Bitcoin globally, right? They're one of the top 10 holders of Bitcoin globally. So the correlation to MicroStrategy and Bitcoin is very, very close, right? So I need to pay attention to that on a day-to-day basis to make sure that my money is invested in something that I still believe in, right? It's the same thing with MVDY, right? The reason I invest in MVDY is because it tracks NVIDIA. NVIDIA is one of the most profitable companies in the world, right? Their net income, their net revenue is ridiculous, right? They are industry leaders, and they are one of the biggest companies in the world. And so I choose to invest in NVDY because the underlying asset has very, very, very strong fundamentals, right? It's the same thing. It's the same reason why I invest in AIPI, right, from Berkshires. AIPI has only been out since June of 2024, but if we look at their assets under management, they have almost $300 million in assets under management. And then, of course, you already know the brother-sister fund, FEPI, FEPI. This one has been out for a few years. This one's a bit older. And they have some other leveraged, ETFs and different things like that as well. But this right here is a very consistent dividend payer, and it has built-in diversification, meaning that it is almost an index within itself, right? It has these companies, these really big companies that all of us know: Palantir, NVIDIA, Facebook, Cisco, Intel, right? And so you have to do your research. You have to do your due diligence. This is not financial advice, but I am encouraging you to take the information that I put out there, but go ahead and do your own research and do your own due diligence, because you don't want to end up like our friend over here who put all his money in RYLD and quit his job and thought that this was going to take him to the promised land. It ain't gonna happen, right? So you have to do your due diligence. You have to do your research. And this is the reason why I am starting to diversify even more, right? I have MSTY, which the underlying is based off of Microstrategy, which has a heavy correlation to Bitcoin. I'm invested in MVDY, which the underlying asset is NVIDIA, an industry leader, one of the most profitable companies in the world. I'm invested in AIPI because it has built-in diversification, and AI is the new thing going into the future, right? I'm invested into XDTE because they perform options based off of the S&P 500, which is the biggest index on the stock market, right? And then I'm also invested into AMZP, which is based off of Amazon. So as you can see, I can explain each and every investment that I have, and the reason why I have confidence in it is because the underlying asset, right? So you have to be aware of what you're invested in, and I would never advise anyone to put all of their money into one high yield ETF and then just retire early. I don't think that that's practical, and I just don't think that that's really the most intelligent thing to do. So I did want to use that comment as an example. I do appreciate whoever commented this, JT Adventure 5619. I really do appreciate that, because it gives us some insight onto how you should navigate in the market, right? So you have to keep up with the trends. You have to keep up with what's going on in the market at that given time. And again, when we look at RYLD, I mean, let's just be honest here, right? Over the past 5 years, it is down 34%. And I believe this pays anywhere from an 8 to 10% dividend yield, and they pay it out monthly, right? 8 to 10% annualized, and it is paid out monthly. But if you look at the chart, this is, I mean, you have so many better options, right? The market has evolved so much. So this type of strategy is just a new implementation of how the market, evolves over time, right? Remember in the last video how I talked about back in the day, back in the 70s and 80s, people had to call in to trading floors in order for these brokers to execute their trades, and then they would have to pay commission on each trade, right? And then the market evolved, right? If you guys are familiar with Robinhood, Robinhood is good. I've used it before. I no longer use it. But one thing you got to give Robinhood credit for is the fact that when they came out with their brokerage account, they came out gunslinging, right? They came out commission free. And what it did is it forced the market to adjust. And so all the other big brands that are a lot bigger than them, right? These big institutions like, Vanguard, Fidelity, Schwab, all of these big institutions were forced to change the way that they package, their brokerage accounts for retail investors like you and I, so that they can keep up with the market trend of commission-free trading from your smartphone, right? And then the options game changed completely as well, right? Global X is actually one of the original covered call ETF option income funds. But basically, it's changed from the retail investor having to buy 100 shares of any given stock and in order to perform one contract. And now you can just buy an ETF where the ETF managers have a bunch of money to throw around, and they're able to perform a bunch of different options, and with hundreds or thousands of contracts at a time, they're able to extract all of this premium from the option market and then pay us out as the investor in the form of a dividend. So like anything else, things evolve, right? And you have to keep up with the trends. So again, this video is really just kind of giving you guys some motivation, but also giving you some insight as to why I pull up these charts, right? I pull up these charts because you have to be engaged. If you're not really willing to be engaged in the market, that is fine. Just put your money into an index fund or a mutual fund, let it ride out for the next 20, 30 years. That'll work as well. That is actually what I do in my retirement accounts. I believe that still works as well. But when it comes to my individual taxable brokerage account, my goal is to create cash flow, right? And so in order to create cash flow safely, there's always going to be a risk, but you can mitigate that risk by being engaged, by being active, by diversifying. Now, you don't want to spread yourself too thin, right? At the moment, I have about 5 holdings. I probably will not exceed 10 holdings total over the next couple years, but because I don't want to spread myself too thin. But you do want to diversify, right? You want to have your money in a major index like XDTE with the S&P 500, right? You want to have a couple individual companies that have a lot going on behind them, right? Microstrategy, Nvidia. You want to have some tech in your portfolio, right? So this is just strategies that you can implement in order to mitigate, risking your money and your portfolio being depleted, and your portfolio going from $200,000 net down to $133,000, and your dividend income decreasing, right? You don't want to be this guy. So again, I hope you guys got some value out of this video. I hope I didn't over explain or under explain. I hope you guys kind of get where I'm going here, but I think the short of it is, the point I'm trying to make here is, you have to do your research, right? You have to make an informed decision. When it comes to these high yield dividends, it's not just about throwing your money into whatever pays the highest. You have to do your research. You have to understand what the underlying asset is, so that you have that confidence that your money is in a good position, and that you're in the best position in order to be successful, right? When it comes to generating monthly cash flow. So as always, guys, I appreciate you guys stopping by the channel, and I will catch you in the next video.